Welcome back. Time for today's Tech Check. Meta, the next tech giant to report earnings following Alphabet and Microsoft last night. It's coming up in a few hours. Julia Borston is looking ahead to it. Hey, Julia.
Well, Carl, Mark Zuckerberg declared this the year of efficiency. So now the question is whether a slimmed down Meta can accelerate its revenue growth. Now, earnings per share are expected to fall by 25.5% in the first quarter compared to the year ago quarter, while revenue is expected to decline by nearly 1%. And there will be a lot of focus on that top line number, whether or not they can get it into the green. But investors will also be watching for a couple of other key things. First, commentary about the ad market weakness. Second, Meta's progress making money from Reels and also Messenger. And then third, this question of how much Meta is investing in both AI and the metaverse and when those different types of investments will start to pay off. Evercore warns, quote, one key headwind that remains is the persistent ad winter. And so far, we see no signs of recovery on that front, saying we think Meta's scale and data advantage should make it somewhat resilient platform. Year to date, the stock is up about 76% as Meta has outperformed both its peers and the broader market. And despite those gains, analysts are still very bullish on the stock. 71% of analysts have a buy rating and 20% have a hold. Carl?
Yeah, I mean, I keep thinking, there's been a lot of bull cases tossed around in the last couple of days. I'm looking at Mizuho yesterday, Julia. Ad volume per DAU has accelerated in the past 6 quarters. That's on top of all of the operating expense potential downside on spending. I just wonder if you're hearing a lot of bear cases going into this.
Yeah, I mean, look, there are so many concerns about the broader ad market, and that's something that really could be the bear case here. And it's something that we heard when we got those results from YouTube just yesterday, a part of Alphabet. But I think the broader question is sort of if there is an ad contraction that is persistent, that does continue through the rest of this year, or at least through this summer, which are the companies that are going to be best positioned to navigate it? The companies that you can quickly turn off advertising tend to be those that suffer most when there's the beginning of a downturn, because you can quickly hit pause on those ads. But at the same time, if there's an opportunity to quickly ramp up, Meta might be seeing some of the benefits of that. And also, if they're really delivering on targeting and measurement, that should enable them to be more competitive. So I think that's a key thing here, is how well positioned they are amid this ad contraction.